Everyone is talking about what Warren Buffett sold. They are obsessing over the $143 billion in Apple stock he dumped. They are panicking over his exit from Bank of America. The headlines say he is cashing out before the crash, but they are missing the real story. You don't build a $1 trillion empire by holding paper cash that loses value to inflation every second. Buffett isn't just selling, he is buying. But he is buying an asset class that 99% of retail investors are completely ignoring. While you are chasing Nvidia and Bitcoin, the Oracle of Omaha is quietly backing up the truck into a specific, unglamorous, and critical sector of the economy. He isn't betting on a crash, he is betting on a regime change, a fundamental shift in how the global financial system works. And if you look at the 13F filings, the pattern is undeniable. He is swapping paper promises for the one thing that survives when the debt bubble finally pops. To understand what he is buying today, you have to look at what he did the last time the U.S. economy faced a debt crisis in the 1970s, when inflation tore through the American economy and the stock market went nowhere for a decade. The winners weren't the tech darlings of the era. The winners were commodities. The winners were energy. The winners were tangible assets. Buffett knows his history. He knows that when national debt hits 120% of GDP, which is exactly where we are right now, the government has only one option: inflation. They have to print the money to pay the interest. So, while he is selling consumer tech and banks, sectors that get crushed by inflation and defaults, he is quietly building a fortress in the one sector that benefits from the destruction of the dollar. So, what is the shadow asset? It's energy infrastructure. Look at the filings. While he was selling Apple, he wasn't sitting idle. He was aggressively increasing his stake in Occidental Petroleum. He has approval to buy up to 50% of the company. He is sitting on a massive position in Chevron. Why? Because Buffett understands the math of energy. The AI revolution that everyone is hyped about requires massive amounts of electricity. The data centers, the grid, the electric vehicles, they all need power. The U.S. power grid is breaking. Buffett isn't betting on the AI software that might go to zero. He is betting on the electricity that powers it. He is buying the toll booth. He is buying the physical oil, gas, and energy infrastructure that keeps the lights on. This is a bet against the U.S. dollar. When the dollar weakens, the price of energy goes up. It is the ultimate hedge. He is trading digital hype for physical necessity. But there is a second part to his strategy, and this is the part that Wall Street doesn't want you to imitate. That $325 billion cash pile isn't sitting in a vault at a bank. It is sitting in short-term U.S. Treasury bills. Right now, the U.S. government is paying him 5% interest just to hold his money. That is $16 billion a year in risk-free income. Meanwhile, the S&P 500 pays a dividend of less than 1.5%. Do the math. Buffett is getting paid 3 times more to do nothing than he would get for owning the best companies in America. This is the liquidity trap for the rest of us, but it is a weapon for him. He is parking his wealth in the most liquid asset on earth, short-term government debt, while he waits for the credit cycle to break. He knows that when the commercial real estate market collapses in 2026, banks will stop lending, companies will be desperate for cash, and Buffett will be the only one with a checkbook. He isn't holding cash to be safe. He is holding cash to buy your assets for pennies on the dollar when the panic starts. Contrast couldn't be more terrifying. Retail investors are loading up on tech stocks at all-time high valuations, hoping the AI bubble never bursts. They are buying the paper economy. Warren Buffett is dumping those exact stocks to buy energy and government yield. He is buying the physical economy. He is positioning himself for a world where inflation stays high, where energy becomes scarce, and where cash is king during a liquidity crisis. He has shown you his hand. He has shown you exactly what he thinks is coming. The question is, are you going to follow the hype on CNBC, or are you going to follow the money of the man who has survived every crash for the last 80 years? The smart money has already rotated. If you are still holding the bag when the rotation finishes, it will be too late.